Hello investors, it's been another good month for the markets. The Nifty was up more than 4%. Your portfolio has again outperformed and we've done much better. In fact, this is the 5th month of consecutive outperformance. We had told you that the shuffles and the churns that we did last year will play out when the market trends, and the market is trending, and really you can see how the portfolio is doing a big catch up and outperformance. The thing that happened this month, which was very heartening, is that the market touched lifetime highs. Lifetime highs are special because what it really shows you that we had entered a territory which we have never entered before. This is also a time when a lot of people suddenly wake up, and I get calls from clients that who have topped up at lower levels or have averaged earlier say that should we take some profits. Most people have missed the bus as usual. They say, oh, should we add now? A lot of people want to add now. Obviously at lifetime highs you want to add. The question comes up, should we wait for a correction? So let me answer that first as to where we think the market is going. And second is that ultimately we buy stocks. So I am also going to cover the fact that where we are positioned and where we think the themes and trends are going to play out. Because not only do we want to do what market is doing, but we want to do better than that. So let me get right into it. And the first chart that I want to share with you is the Nifty 50. So you will see that this is a chart which shows time post-COVID. So the market had a very good trend from 2020-21. It is shown by the black line. But post that in 22, you will notice that the market went sideways. In fact, it was corrective. And this was a global correction. This was a time where there was a lot of chop and churn. Portfolios did have difficulty, but what you can see is that as of last week the market has made a lifetime high and a very good convincing breakout. We feel that this pattern, which is really a nice bull market in 2021, needed time to consolidate, needed time to correct, and the corrections that happen ultimately fuel the next up move, which I think has just started. So we feel that the Nifty would set out a minimum target of 21,500, which is a good 12 to 13% from here. So the question that people ask, should we book profits? I don't think so. I feel there's a lot more juice left. The second question is that, should we enter now? Is it not too late? I don't think it's too late. And third is, should I wait for a correction? I also don't think you should wait for a correction, because more money has been lost waiting for corrections than in the real correction. So I think the market is actually getting into its stride right now, and it's a great time to be allocated to equities. As I said, everyone waits for corrections. Nobody knows, even I don't know when they will come. But the important part is the direction or the trend is up, and we still think that there are sizable gains. Well, you will say that you are very bullish about India. But things are not good globally. You have a Russia-Ukraine war playing out, you've got US, recession, inflation, all sorts of discussion happening. So let's look at global markets. And in fact, if you look at global markets, you'll realize that the ultimate drive or the ultimate confidence I am getting is actually the way global markets are playing out. So what you see on your screen is something called the All Country World Index. We've covered it earlier. It is a summation of 49 global markets. So it's got US, it's got Japan, it's got Europe, it's got India and a lot of other emerging markets. So 49 markets, the biggest broad-based equity index in the world. Here too you will see that post-COVID 2021 we had a very good up move. But you'll notice that the correction that happened in global markets was much deeper than what India experienced. However, in the last few months, you will find that recovery or repair is happening in global markets. So this is the basic theme that is happening. It's not just India. It is actually happening globally. And you'll see that the All Country World Index has broken across the horizontal red trend line. And our target for this up move is 109, which will almost be a lifetime high, which is 13%. So the interesting part is that the percentage move pretty much overlaps. But I think that actually India may outperform, or in fact it will exceed our targets. The reasons are that there is a lot of difference between 52-week highs and lifetime highs. global markets, barring a few markets in Europe, are making 52-week highs. That means that they're nowhere near the peaks. So the journey up will have resistances. But when markets make lifetime highs, like in the case of India, we call it blue sky territory because there are no resistances. So such markets tend to lead in a bull market. And that is why markets that break out early tend to be leaders. And India is showing tremendous leadership qualities in the global space. Whether it is our GDP growth, whether it is a general perception that is happening in India, and the return of FII flows makes me optimistic that India would be a leader in this up move. So the targets I shared with you in the previous slide, I feel would be minimum and probably be exceeded. Of course, we are portfolio managers and we don't buy indexes. So the question is, what are the stocks and themes to play out? I am a strong believer that very often themes that play out actually tend to be also global in nature, and that's why we place a lot of emphasis in study global markets. When I look at the US components, there is a lot of move that is happening in technology in NASDAQ. But remember, technology was beaten the most last year. However, I think that the horse that is going to really perform the best globally and more so in the US are the industrials. So if you look at the Dow Jones Industrial, you will see that again a good rally in 2021. However, the correction was not as deep. And this is on the verge of breaking out. We have a target of 40,000, which will obviously mean a lifetime high for the Dow Jones Industrial Average, which is a 16% upside. But more importantly, it gives us a clue that the action we think thematically is happening in industrials. And this is how we have actually gone and constructed our portfolio. So if you see your portfolio, the mega trends portfolio, you'll realize that first and foremost, under the allocation in the red square, we are 99% plus allocated. That means we are fully invested. Corrections will come. We will feel, we should have, booked some profits, but that is all something we can't predict. We are allocated, we are bullish, and what you see is nothing but a demonstration of our faith in our thought process. We are invested in 12 sectors, so I can cover them for you. Our highest allocation is in electrical equipments. This is something that there is a lot happening with the government initiatives, a lot of action happening in railways, and we feel that rural electrification, etc. is playing out very good. We have 3 stocks and our allocation is 14%, which is much higher allocation than what the index has. The second is FMCG food. Now FMCG is a very broad basket, but where we are focused on is food, because we feel that there is a massive shift happening in consumer behavior. And if the monsoon plays out as it has started out well, we feel that this could be another sector that will do very well. Specialty chemicals are old favorite. In fact, we've cut down positions and we feel that here there may be some concern in one stock, but as and when the time comes, we are very quick and we will reevaluate and redeploy. Auto ancillaries, a sector where we are focused on electric mobility. Defense, how defense stocks are moving. Banks is something which is unanimous bullishness, but we actually have a little differentiated stance. We feel that it is a well-discovered story. Of course, banks will do well. So our allocation is not overweight. Going ahead, engineering, again a sector which is linked to industrials. So what you will see in the overall build-up of the portfolio is that we are focused on an industrial recovery. That's what our models tell us. We are looking at sectors which are inward facing based on the growth in India. The years prior to this, the focus was on external focus, export oriented with an IT, pharma. However, we feel that this trend that is going to play out is going to play out in industrials. It is going to be domestic, and that is purely reflected in the way your portfolio is constructed. So this is really putting our money where our mouth is. We have 23 stocks, so again you will realize that it's not we have a good 4 to 5% allocation minimum per stock. So you will find that true to our philosophy, true to our style, we take concentrated positions in sectors and themes, and which are very, very different from what indexes are. And that's the objective we want to bring to the table as portfolio managers, a differentiated style a differentiated approach, a differentiated thought process will ultimately give you differentiated results. So with that, I leave you for this month and cheers to a new lifetime high. Thank you.